Managing the accounting for large organizations is a monumental task. Reconciling revenues and expenses across millions of transactions typically takes an army of professionals. And yet, massive errors happen all the time, sometimes by accident, sometimes on purpose. Could AI solve this conundrum? Learn more on this episode of Future Proof.
The future is here already. It's just not evenly distributed. Yet. Today's world teems with innovation. The nexus of hardware, software, and human ingenuity promises a revolution in possibilities. What does tomorrow look like? Witness Future Proof.
Yours truly, Eric Kavanaugh, is here, and we're going to talk about a pretty hot topic. And in fact, there was some news that just broke today, which I sent to our guest and said, "Oh, I think this is the kind of thing you talk about." And he said, "Why, yes, it is." That's exactly what we're talking about. We're going to be talking with Ahikam Kaufman. He is the CEO of SafeBooks AI, and they provide transparency into financial matters, think accounting. And just today, as I was preparing to do this show, I came across an article that said Macy's delays earnings release as it says employee hid up to $154 million in delivery expenses. So this is throwing off their earnings report and throwing off their guidance. Not a very good look for our friends at Macy's. And $154 million. Wow, that's a lot of money. So let's bring in Ahikam Kaufman. Tell us a bit about yourself, Safe Books, and how you would have helped prevent something like this from happening.
Hi, good afternoon, and thank you for having me, Eric. So my background is in corporate finance. I spent 15 years in corporate finance before becoming an entrepreneur. And after being involved with a few companies, I thought about a problem in my kind of own original neck of the woods, which is corporate finance. And one of the big challenges you have today in companies is um, eh, corporate the financial data is scattered across many systems,
Hmm.
and part of the unknown work of the corporate finance team in the enterprise, is to validate and substantiate the financial data. It's called internal controls. Internal controls are actually a core piece of the work of
Hmm.
the office of the CFO.
Hmm.
It's a very tedious work, very difficult work, especially when the data is scattered across many systems. I'd like to think that the average office of the CFO today has between 10 to 20 systems they work with, where all the financial data is being processed at. And it's almost impossible to do it manually. Our system, basically what it helps to do is take your controls today and other controls that we have out of the box, and basically monitors the financial data end to end to confirm its accuracy, to confirm its completeness and its integrity, and it does that in real time. So being able to monitor financial data end to end and identify anomalies, such as the anomalies that Macy's reported actually today, would be something that we'll be able to do. I think what happened in Macy's, and I'm not an expert in Macy's, but I think what you see there is the ability of a single person in the corporate finance team to be able to conceal such an understatement of the financial records, and being able to do it single-handedly. Not only that, but when you're relying only on people and not on automation, you can't have the right flagging to be able to check an anomaly like that, because the same guy who's responsible to report it is the same guy who actually checks it.
Right. Yeah,
I'd
that's
like to
right.
think, correct, one core one core principle in the office of the CFO, I'm sorry, one core principle in the office of the CFO is segregation of duties. And typically segregation of duties exists when you handle money in payments,
Hmm.
in disbursements, in payroll, but it's not emphasized much when you handle the financial records. I'd like to think that going forward, also with our technology, the ability to rely on automation, to delegate to automation to secure and check your data would increase would increase the integrity and the reliability of the data because
Mhm.
machines cannot lie and they will not conceal the way it was done today. So I'd like to think what happened in Macy's was a result of manual controls performed by the same person who was responsible to report on them.
Yeah. What's funny, you just used one of my mantras. I've been saying this for years. Machines don't lie, right? That's why we like them.
Amazing.
Because they just report what information they have. Now, it's not that they're always correct in what they report, but that's either because the data that went in was wrong or because there was a poor calculation somewhere. There was some transition. You move data around a lot. Sometimes it gets lost. I mean, we have a whole space in the IT world called observability these days, and it's all about knowing which data is coming through. Is it coming through properly? You have all these early warning signs. And, to your point about anomaly detection, I've noticed that the big banks like Capital One, for example, are starting to watch for things because you'll get a little notice on your phone that says, "Oh, you had two identical transactions. Did you make these purchases?" That's an anomaly detector, right?
Right there. It's interesting because I actually came from the a personal finance world and the payment world. I sold the company to Intuit a decade ago,
Wow.
and you're absolutely true, and it's super important. Intuit has Credit Karma today and Mint, which helps to monitor your finances. In the corporate world, many of those controls are established. So the anomalies meaning you have processes which are documented to identify anomalies and issues. The challenge is and the problem is that there's no automation available to actually execute that. So a
Hmm.
lot of that work is kind of executed by either the internal finance team or it's outsourced to the big four or other consulting firms. And the challenge with that, with every human being trying to monitor data end to end, with the complexity of the systems and the volume of the transaction, is that he can't do it in real time
Right.
and he can't do it across all the data. So if you think about essentially what we're doing is very similar to in the concept of like what the cyber platform are doing to cyber exposures, where we monitor things end to end. We we actually identify vulnerabilities and we report them at scale, allowing not a single resource but multiple resources to have visibility into those vulnerabilities and exposure and being able to identify them and remediate them. And it's all happening in real time across 100% of the data.
Mhm.
So if you, in the finance world, and again, it's concepts that have been in finance for many years, there is a concept that was nurtured hundreds of years ago of sample auditing, which is um, where you basically rely on sampling to check data. And you say, okay, let me focus on 5%, and I assume that 95% will follow.
Mhm.
Today, with technology, you don't need to sample. You can check all the data. So the same way Capital One allows, uh, can help you by surveying and monitoring your own personal data like millions of other consumers or other bank customers, we can today check the enterprise data end to end across systems to validate its accuracy and integrity.
Hmm.
And and that's like what's missing today because what finance teams are used to do, they're used to use BI, download dumps of data, tons of data into spreadsheets and trying to reconcile it or check it where it's humanly impossible.
Right. That's right. Well, and this is, I think it's a very, very interesting time we're facing right now. And we've heard stories about, oh, how in the future you'll be able to do your taxes automatically. And I think that's true. I mean, I think the tax code right now, this is a bit afield of our topic, but the tax code is very, very complex. And that is a big part of the challenge right now. But if you just think about the accounting side, for example, in QuickBooks, right? Intuit owns QuickBooks. I've noticed that you're able to, when you start typing a name in, it'll say, "Oh, is it this company? Is it that company?" And it always has their information in there. So it's that kind of automation and checking that is going to be very valuable in doing accounting. So you enter your expenses. Well, if it's a restaurant, I'm pretty sure that's an expense of going out and eating somewhere. So I know where that should go on my tax form, basically. Same thing internally. And what I'm really curious to know is which systems you tap into. So are you actually tapping into the banking system by API, their accounting system, the ERP? Like what's the suite of technologies that you tap into to pull your signal that you use to do what you do?
That's a great question. I'll start with, the problem that Intuit is successfully solving in the SMBs are obviously way different. They're trying to help small business owners just execute their business or manage their business better. In the enterprise world, it's very different. You have
Mm.
a lot of systems that participate in every single business transaction,
Right.
and
That's
that's
right.
what makes it complex. And you
Right.
also have compliance. So to address your question, so think about, so the way we kind of think about the business, we think about it by business processes. Think about a business process called order to cash. Order
Mm-hmm.
to cash is where the enterprise record all the activities from where you quote to a customer, prospect to a customer, you close the opportunity successfully, and then you start to build the customer, collect from the customer, and book the records in your financial system, in your ERP. So in that example, think about uh, the same transaction being captured in your CRM, in your
Mm-hmm.
billing system,
Mm-hmm.
in your payment gateway. Sometimes you have a legacy system that kind of, if it's a tech company, it has its own business system inside as part of its legacy platform. And then you have your ERP. So you have like, and sometimes you would have multiple payment gateways because you're trying to manage your cost, processing cost. Maybe you have like a different payment gateway for Europe and for the US. So think about, in order to cash process, which involves five, we've even seen 10 separate systems that captures and process that data. And now you need to sit in finance and not only make sure that the data is correct, you need to substantiate that. You need to be able to evidence that to your auditors or for compliance purposes, and good luck with that. So that
Mm-hmm.
would be an example. Different system would participate in a process like a procure to pay, where
Mm-hmm.
you document your procurement activities and your approvals, and then you go ahead and issue an order to a third party, to a vendor, and then you pay to that third party, and so on and so forth. Another process is hire to retire, where you capture your payroll, and your payroll and HRIS information, HR information systems could be different from, again, US, Europe, international. So you have dozens of systems that participate in every single process like that, and it's really complex to manage the data at the granular level. Now, I always say that the finance world, the corporate finance world, is different in two or three major aspects. The first aspect, that's your business data. It's not just like, when you think about cyber and when you think about IT, DevOps, all that data is important, but your finance data, the integrity and completeness of your finance data, it's how you manage your business, right? So that data has to be accurate. It
Right.
has to be accurate for currency, for location, for, which expense item. You talked about expense categorization before that. So that's one aspect. The other aspect is compliance. Your financial data is many times regulated, whether you're a public company or
Right.
you own by certain shareholders, you have a debt from a bank, it's always regulated. So the ability or the need to maintain the integrity of your financial data is not just because it's the right thing to do, but you're
Right.
actually right because you need to maintain compliance. The third reason, the third pillar composing the important financial data is because financial data is money. So
Mhm.
it's not just if your financial data is wrong, it's not like another world or another system where you fix the data so you get better visibility or whatever. You can leave money on the table, whether you're not collecting, you're not billing your customers on time, you're not collecting on time, or you're double paying your I think between fraud and double payments, the assumption is that every large company probably overspend like at least 1% of its spend. So leaving money on the table is also a ramification of mismanaging your financial data. And
Mhm.
again, today, most of that data, most of these controls are executed manually.
Hmm.
And that's the challenge.
Just as some background, one of my clients years ago was a company that did hierarchy management first for financial services, and what I learned from one of these guys is that exception handling takes most of your time. So most of the accounts, when they close the books at the end of the month, most of the accounts are just fine. There's no trouble. But when there is trouble, oh my goodness, there's real trouble because you have to, as you suggest, go line by line. You're comparing this, comparing that stuff that a human being can do very slowly and fairly poorly, I must say, whereas machines, especially machine learning algorithms, can be extremely efficient at just checking things. Is this correct? Is that correct? Is this correct? Is that correct? All day long, you can just go back and forth, back and forth. And that's why you want to be able to use artificial intelligence, machine learning, these kinds of capacities, along with automation, of course, to find the anomalies. And that's really what you're doing, right? Is you're searching for anomalies and then you're explaining to the user why the system thinks that's an anomaly. Got about 1 minute before this segment is over. So real quick, you're doing anomaly detection, but it's explainable. Is that right?
It's explainable. It's actually some of the explainability is provided by AI because we create for every company a dedicated model that
Mm,
learn its cost structure and then
wow.
able to explain the variations, the discrepancies, the fluctuations from your transactional data. So your ability not only to see the anomalies or the fluctuations, but actually to get the explainability that can or cannot resonate with you, but you're the expert on your data. So it's very easy for you to be able, instead of focusing on fetching the data or analyzing it, just to deal, as you mentioned before, just to deal with the anomalies, just focus on the remediation process instead of the fetching and the analysis of tons of data, which is humanly impossible.
That is very interesting. We're going to pick this up after the break, folks, but we're talking to Ahikam Kaufman. He is the founder of SafeBooks AI. They are a financial transparency software company, so they're helping you stay on top of the money, where the money is going, if it's going to the right places, and if weird things happen, and that's when you want to roll up your sleeves and take a look and say, "Uh-oh, why is there $143 million now in the expenses that wasn't there a day ago?" That's a problem. We'll be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, already a fascinating show. We're talking to Ahikam Kaufman. He is the founder of SafeBooks AI. They are a company that provides software to track your finances and track your books and make sure that things are going well. And Ahikam, I have to say, I was very impressed and intrigued when you told me that you build a mini model for each company. So I'll throw one of my theories at you, and I realize these are much smaller models than we're talking about ChatGPT. Those are
Correct.
large language models, right? And there are also small language models, and there are also lots and lots of other models. I mean, there's no end to the different ways that you can build an AI model. And training it is fascinating stuff. We've been talking to a number of companies doing that work these days. There's a lot of work that goes into it, but I'm really intrigued that you, for every client, will build out a model, a sort of mini model that you will train on their historical data. And you told me in the break there that you assume the historical data is correct. So this is very interesting because by giving each company their own model, you are representing the uniqueness of every company. Because even in the same industry, even if you're fast food chains, there are going to be a lot of unique things about your organization, whether it be how you hire people, how you come up with your pricing models. I mean, there's all kinds of stuff that comes into it. And what I've learned about the enterprise, to your point earlier, is that it is always bespoke. There is no one enterprise that is exactly like some other enterprise or even really all that close because again of the DNA of how you got here, the history of the company, all the systems that you use. So I think that's very compelling that you are building a model for each one of your clients and you train it on their historical data. What kind of historical data do you typically train it on? And if you can go into that a little bit.
So Eric, you're making my role here very easy because it's almost like as if you were working for SafeBooks. So indeed,
I get it.
we're making a model for every company because every company is unique in the way it's doing business, the system it's using, and its data structures.
Hmm.
So we first of all, companies don't allow it, and that's actually one of the things that constrains CFOs today. Because, for example, think about even if OpenAI had the analysis capability to give you answers on, let's say, variance analysis or fluctuations, you're not allowed to take corporate data and put it in OpenAI. You can't do
Right.
that.
Right.
So, but again, as you said, every company is unique. Their data structure is unique. So we have to build a model for every company. And basically, when we take all the data from their CRM, from their ERP, from their billing system, from their payment gateway, that data set, that structure, the way they customize the system is unique. And therefore, it wouldn't help even if we use other companies' models to be able to check or validate your data. So that's what we do. So the good thing about enterprise financial system is that we have the historical data, so we can always look back 2, 3 years back and just train the model based on that. And we actually have a unique way to validate that the model actually learns it correctly. And then we kind of have all kind of rules on top to make sure it gives you only the the uh, uh, the the insights which are important to you, trying to avoid false positive as much as possible.
Right.
So that's also important because otherwise finance team can argue that, with all the goodness comes a lot of redundancy or redundant work, that now all kind of things they have to look at, which doesn't give them any value. So we have a
Mhm.
combination of AI and non-AI technology that allows us to kind of laser focus on things that matters, and basically gives you all the insights you need to be able to validate, substantiate, and remediate your financial data.
Mhm.
And
Yeah,
what's more
that's
important, if
go
I
ahead.
can add, Eric, if
Yeah.
that's okay, again, um, think about, I'm sure you're familiar with Sarbanes-Oxley. What's
Mhm.
really important is the fact that when you are regulated for whatever reason, whether it's Sarbanes-Oxley or you have a debt from a bank or you just have a syndicate of investors that requires that regulation, the you need to validate and substantiate your data through internal controls,
Mhm.
even if all your data is perfect. So think about the office of the CFO needing to execute tons of manual work to validate and substantiate the data, even if the data is okay. So
Mhm.
what I'm trying to say is, even if your data is perfect, you still need to do that work. Even if
Mhm.
your systems are perfect, everything is perfect, you need to be able to demonstrate that you've checked your data. And that's where our value is. Yes, of course, we can identify mistakes or issues, but even if we don't do that, we are still making the process way more efficient than by executing it with analysts or accountants. And one of the things I wanted to mention, I don't know if we want to touch it now or later. We're seeing a significant accountant shortage, which
Mm.
is unique. It's like, you remember the story about the bees disappearing 15
Yeah.
years ago, and
Right.
the bee population, the global bee population decreasing by like a significant amount. We are watching and seeing a, a significant decrease in accountants. And I think in 2022, it was the year where the lowest year in the last 70 or 80 years where people signed up for a CPA license. We don't know what the reason is, but the
Mm.
work is difficult, the work is tedious, and I'd like to think that even especially in the post-COVID environment, Generation X, Generation Y, Generation Z, they're trying to get away from that tedious data analysis paralysis works that we are actually automating.
Yeah, I mean, you bring up a lot of good points there, and I spent a whole past life in the risk world. I did a bunch of work with a group called the Global Association of Risk Professionals, and I remember in that world, control points are very, very important. A control point is any point at which a person or machine can take a decision, either yes or no, or question something, look into something more. And that's kind of what you're alluding to, right? Is you want control points baked into your processes, and, some of that is in the ERP, some of that is in the accounting system, some of that is manual that people have to pay attention to, but you want as little manual as possible, right? I mean, that's the vision, is to automate as much as possible, allow for corrections. So like when I enter in some record into my ledger, if it looks really weird, you want a little alert right then. Are you sure about this? Is that the kind of thing that you also do through your software or that you recommend for your clients?
Yes. Um, uh, I'm sure from your historical knowledge, when we look at companies, the size of a finance organization is roughly, I'd like to think roughly, let's say in technology companies, okay?
Mhm.
It's where they don't have inventory. They don't, for the most part. I'm not talking about Amazon. Talk about software technology companies.
Sure.
The size of the finance organization is roughly between 3 to 5% of headcount.
Right.
I'd like to think that the finance leadership don't even know the folks who are doing the work at as I call it, at the engine room,
Mhm.
3 stories below,
Right.
validating and crunching all the data.
Right.
But those people, I'd like to think, saying cautiously, like in the Macy's case, those are the people who are doing one of the most important work of, again, validating and substantiating the data. Everyone likes to, be in the cockpit, talking about financial strategy, about funding, about financial planning and analysis. But at the end of the day, it's what's really important is the sheer data, but that's really being handled and managed by people which are not high in the food chain, and every single mistake could be horrifying, like we've seen today in Macy's.
Mhm.
And I'd like to think that your attention and your visibility into those people who kind of maybe I'm missing the term, but they're sitting on the they're actually sitting in the driver's seat of data governance. It's so crucial and so important, and 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 again, the chances of them making mistakes, the chances of them, being rotating to different jobs, and then you lose all the experience, all the knowledge, and then having someone coming new to the position and he doesn't check things carefully, or he's all of a sudden he's sick and he's away for 2 weeks. And the problem is that compliance is not optional and data
Right.
controls are not optional. And you just lose that. And I think it's mind blowing today that unlike in cyber, unlike in DevOps, unlike in IT, unlike in marketing, all the data reconnaissance and the data validation, it's all for the most part, it's manual work. In my investor presentation, I have a study from Arizona State University from their accounting department, and they went and engaged. It was done a year ago, I think, in February 23, and they went and engaged. I think it was 120 Fortune 500 companies, and one of the questions was about the level of automation in your controls, and they
Mm.
listed all kind of controls. Those could be fraud controls or data controls or spend management controls, billing controls. What's the level of automation in your controls? And the percentage of companies that responded with 0 to 1, meaning they have no controls automation, was between 45 to 75% of
Wow.
Fortune 500 companies.